FirstRand, the financial services group that owns FNB, Westbank and Rand Merchant Bank, increased its interim dividend thanks to strong half-year profit growth driven by new business wins across its lending units and higher deposits. FNB, the group's retail banking unit, reported that its performance was driven by customer, transactional and deposit growth. Active customers increased by 5% to 11.2 million and deposits increased by 11%. For more, I'm joined by FNB CEO Jacques Cilliers. Jacques, thank you so much for your time. So some quite interesting, that I've mentioned, line items that I've mentioned there, strong growth in overall customer transactions, as well as an increase in active customer base. But let's look back at the period that was for FNB, the highlights for you.
Thank you for having me and for the viewers. I mean, I think the real heroes of our results remain always, as we say, our clients, because it's quite messy out there, and to make sense of an economic climate and be resilient and keep your business doors open and keep going as both in personal and business capacities. Clearly, it requires a lot of tenacity from our client base, and we are unbelievably humbled and grateful that we could be there to support them through this process. It's been a 6 months in which we continue to grow. We were going into the last sort of 2 years, or the year after COVID, really opening up our appetites. We supported our clients with great infrastructure to get their growth going, and it's quite a pleasing outcome to, at least at half time for the current financial year, to be able to present these numbers. And then we also have some really good momentum as we move into the second half. So quite positive that we're on the front foot into a very difficult climate.
And it's quite interesting because you describe the environment as messy, and that makes sense because high inflation, high interest rates. But what are you seeing from a customer point of view when it comes to the appetite for credit or even loan defaults, so to speak?
Yeah, so what's pleasing is that our growth at the moment into our good customers, obviously we really focused on what we refer to as good risk, medium risk, not high risk. We don't go into the high risk categories for loan generation. So it's into affordable credit, responsible credit. What's nice about markets like ours at the moment, there are many growth opportunities. There are also support needed for people and businesses as they transition, from to deal with the energy sectors and disruptions. So people are needing help, to keep their doors open, and we'd love to help them finance those installations of the energy solutions as they transition even their buildings. So there's lots of opportunities to help our clients reconfigure themselves for what the market really can afford at the moment. So we see growth, and it's no different than people who are impacted by a drought or impacted by COVID. All those adjustments for us is if we're there to help them through it, then clearly they'll get to the other side of the challenge.
I'm glad you brought up the issue of some of the load shedding issues or the power constraints. Are you able to give us an assessment of the cost of maintaining operations given the higher levels of load shedding that we're seeing?
Yeah. I mean, the costs are from a number of fronts. If you take the first thing is just very simply, how much diesel that we have to, burn to stay afloat ourselves. I mean, obviously we also have an operation to run. So our diesel expenses at the moment, I think for the 6 months, are around about 14 million rand compared to sort of sub 10 it was in previous times. So there is a cost, but the real cost actually is the impact to GDP, right? And that's something that we really wanted to make sure our clients get as little impacted as possible. So it's about financing themselves, keeping their doors open, and hoping that they look after their clients and the production lines can go. So that's the opportunity for us really is that we think that we can add a hell of a lot of efficiency still, in sort of a similar way that we're able to solve people's needs and disruptions. When the post office started struggling with their service delivery, we had to adjust our operating models to support our clients better. And so you see the same thing playing out at the moment, where people really from all walks of life trying to make plan B, C, D, E, and whatever to stay up. So that's what we are really trying to focus on, our own operations, being really reliable for our customers, and then secondly, making sure that their operations are open and they open for business as well.
With just under a couple of minutes left, your sense of the economic climate in South Africa and what's keeping you up at night?
I mean, clearly there's still some runway to flow before inflation and interest rates, start coming down again. We think we're close to the top of that cycle, which I think most of the spectators and economists would have articulated on your programs to the viewers. There are some impacts as a consequence of some of the geopolitical world that still has to play out, which we hope will land in a good space. And then I think what's pleasing is that we have a client base that seems to be on the front foot in their impacted sectors. So it's about clever growth, and hopefully we can help our clients to get through their challenges too.
Jacques, let's leave it there. Thank you so much for your time. That is Jacques Cilliers, who is the CEO of FNB. And just to mention, it would have been great to talk about what was happening on the West Bank side of things, seeing a modest increase of about 6%, and that being a reflection of the tough trading conditions due to rising interest rates. However, we're going to take a quick break. When we come back, we'll have more news for you, so stay tuned.